Market predictions are often wrong. They can lead to financial losses. Market predictions can be misleading. They are often based on incomplete data. According to Harvard Business Review, predictions can lead to poor investment decisions. We will explore how to make better investment decisions. Predictions are often based on historical data. However, past performance does not guarantee future results. Many investors have lost money by relying on predictions. For example, in 2008, many predicted a market crash, but few predicted its severity. A study by Harvard Business Review found that predictions are correct only 50% of the time. Predictions can create a sense of certainty. However, the market is inherently uncertain. Investors should be cautious of predictions that seem too good to be true. A report by the Harvard Business Review found that investors who are overly confident in their predictions are more likely to make poor investment decisions. Diversification is key to successful investing. By spreading investments across different asset classes, investors can reduce their risk. Predictions can lead to overinvestment in a particular asset class. According to the Harvard Business Review, diversification can increase returns by up to 20%. Investors should focus on long-term goals rather than short-term predictions. A long-term approach can help investors ride out market fluctuations. The Harvard Business Review found that investors who take a long-term approach are more likely to achieve their financial goals. The strongest point is that market predictions are not a reliable way to make investment decisions. Investors should focus on their own research and diversification. By doing so, they can reduce their risk and increase their returns. The Harvard Business Review recommends a combination of fundamental and technical analysis for making informed investment decisions. What do you think is the most important factor in making investment decisions? Share your thoughts in the comments below. Remember to always do your own research and consult with a financial advisor before making investment decisions. In conclusion, market predictions can be misleading and lead to financial losses. By focusing on diversification, long-term goals, and their own research, investors can make more informed investment decisions. Always remember to stay cautious and do your own research. Thanks for watching.